What I want to talk about first, though, is the idea that Bitcoin is the only crypto that matters. And we have some new stats that have come out recently that proves this, the point that we've been talking about for a long time now, that it's Bitcoin and then it's everything else. So Bitcoin as the market share dominance has risen to levels over the last few months that we hadn't previously seen, right? Since years ago. So if you look at the yellow number there, those are altcoins versus Bitcoin. So it's the highest that we have seen since October now. It's rising again. And I think we know generally why this is, right? In bull markets, the amount of capital that gets allocated towards secondary coins or altcoins or shitcoins, depending on how you want to talk about it, increases, right? People are looking for longer tail assets that have a higher degree of volatility and can increase in price faster than Bitcoin. What happens in bear markets is the exact opposite, right? So we're seeing this now start to play out where prices have collapsed, specifically Terra, which is marketed there, which is marked on the chart there, and Bitcoin's market share starts to climb again. So of all of the market cap, it looks like alt season is ending and Bitcoin is climbing now. It looks like over close to 45% of the total market cap. So we have a quote here from Julio Moreno, a senior analyst at Crypto Quant. So typically, when there's a correction in crypto markets, altcoins underperform Bitcoin as they are perceived as higher risk coins than Bitcoin. Again, I don't think this is anything groundbreaking necessarily. I assume most people probably knew this by now, that when we move into bull markets, more of that capital gets allocated to longer tail assets because of the degree that they can appreciate versus Bitcoin as a singular asset and the largest market cap of those assets. So we have another chart here that shows Bitcoin's correlation with the S&P 500, which is just off record highs. So not only is it becoming more of a market dominant force within crypto in general, but it's now extremely correlated over the last few months at least with the S&P 500. So these numbers, over we have about 2 years marked on the chart here, have ranged anywhere from 0.10% to almost 0.8 here. Now we're up. So we're approaching those all-time highs again, where Bitcoin is now moving in lockstep with the S&P 500 and broader equities in general, not just necessarily the S&P 500, but it's become a risk asset where people, as rates start to rise again, these assets are selling off just like stocks and everything else. So if we look at Bitcoin compared to some of these stocks, the people that have been complaining for a long time that allocating a large percentage of your portfolio to Bitcoin is crazy because of its volatility have obviously been proven wrong. If you look at the chart here, year-to-date declines in these assets. Bitcoin is down 37%. Meta, formerly known as Facebook, is down 44%. Netflix getting crushed, down 68%. Tesla, down 37%. Amazon, massive business. Oh, everyone, just allocate all your money to Amazon, down 34% this year. Shopify, down 75%. Google, down 25%. Right? And the point isn't necessarily that Bitcoin is outperforming these or doing better than these, or people should allocate their money to Bitcoin versus some of these assets. It's the general idea that all risk assets right now are getting crushed to some degree, and they're being grouped together, and Bitcoin is part of that. So if you want to criticize people for putting a large amount of their money or capital in Bitcoin, then the same should be said for a stock like Amazon or Netflix or Google or Tesla or Shopify, etc. And I think what we've seen now is a lot of the CEOs or the people, the operators of these businesses outside of Bitcoin, I'm talking about all those large market cap stocks that we just talked about, they're all now starting to come out and publicly say, hey, look, our stock is really cheap. We believe it's really cheap. We haven't seen these levels in a long time. And I know some of them are even publicly allocating their own personal capital now back into the business. So they're saying, we're going to go buy $10 million, $100 million in some cases, and even more of their own stock because they think it's reached values now that they didn't perceive would be coming for a long period of time. So not necessarily surprising that Bitcoin has seen kind of this reversal with rates rising and the Fed doing what it's doing. But I would say that you got to zoom out a little bit. You got to look at the broader market, and people that are criticizing Bitcoin for dropping and doing these things not only are not accounting for everything that's happened over the last 10 years from an appreciation standpoint, but they're not typically looking at the broader market and what has happened there. What are your general thoughts, Jen?
Explained it perfectly. I think in bear markets, you're going to see a lot of money be allocated to altcoins and specifically just not Bitcoin, because you can see a higher price appreciation in those smaller denominations of dollar amounts, right? So if a coin is $1, it has probably a greater chance of going to $2, and Bitcoin is doubling in price just based off the market cap of the asset itself. And then when you look at the correlation between the S&P, it's not really surprising at all, right? When people sell stuff, they sell everything across the board. They don't just like kind of nitpick and selling crypto versus selling one of these large cap tech stocks is it's normal, right? You would think that people have already allocated, and I think the argument is that for inflation, how Bitcoin is not the inflation hedge, people have already allocated their money, and that's what they were doing in early 2021. They knew inflation was going to come. They knew what the government did. The government didn't even realize that there was going to be this levels of inflation, but the private market did, and I think people did move a lot of that capital over, and we're going to see in this year whether it holds the test of time or not.
Yeah, I mean, the government could have called 100 people that are investors, and they probably would have got a better answer than the ones that they got internally regarding the inflation that we saw here in the United States. But I also think it speaks to bull and bear markets, right? People forget that Bitcoin as the dominant asset, it's volatile, but it's much less volatile than everything else in the crypto market in general. So when you look at all of the altcoins that we spoke about earlier, or anything else that's considered those long tail assets, they've declined tremendously compared to Bitcoin over the last, 4 or 5 months, or at least year to date, because Bitcoin is a superior asset that has a larger market cap. It's much more stable in context of the decline that we've seen in broader markets, right? Stock market or anything else. So I think that it goes both ways. In the bull market, sure, there may be some altcoins that can outperform, but if you stick in those too long, we've seen it now where it's much less safe to a degree. Now some of those coins are down 90%, 95%, 99% in some cases. And people have gotten their financial situation ruined because they've been playing around in these situations that can drop of a hat, right? Literally, you can lose your money based on trying to chase too many profits in a bull market. And it can change. We all see it now where it's happened over a few months, but at the same time, like, that's kind of quick in the grand scheme of things, right? If you're looking at an asset and you're expecting it to go up and you're emotionally attached to it, these altcoins, and people are rallied around them and trying to get the price to increase, that's not necessarily a game that I personally want to be playing, or I think you should be playing. So Bitcoin may be down, but I guess the broader point is a lot of other assets that people group together with Bitcoin that aren't necessarily look or feel like Bitcoin that are down a lot more than Bitcoin.
Yeah, one thing I would say is just think about the assets that you own, what equities you own, any cryptocurrencies you own, and think about, look, if this asset went down by 50%, which we've seen Bitcoin go 50, 80, 70% down, if this asset went down by 50%, would I buy more or would I sell it out of fear, right? And I think if you're going to sell it out of fear, those are the ones that you have to really think about and be like, do I want to be in this asset? Because I obviously don't have that high conviction of, hey, this will be long term. So if you're in Amazon is down 40, 50, 60% this year alone. It's, do I really believe in Amazon? If you do, this is the time to double down. This is the time to kind of load up on more stock like a bunch of the CEOs are doing when they're doing corporate buybacks.
That's exactly the point, right? The same investing principles. Everyone makes fun of Warren Buffett and people like that who maybe don't understand technology to the aspect that they should today from an investment perspective, but their same principles apply, which is just dollar cost averaging over a long time period into a good business or a good company or a good technology that you believe will appreciate in value and become more important and gain more users and more market share for a long period of time. And don't do it with money that you need immediately, right? Because these are the opportunities now where Bitcoin drops 35% year to date, 40% year to date. And not only maybe you don't have capital to go buy more at a cheaper rate and dollar cost average and take advantage of that, but some people need to pull capital out because they over allocated themselves and now they don't have the ability to do that and they're selling at losses, right? It's just a bad situation. And you need to be mindful of that because whether it's a bull or bear market, those same principles apply for 100 plus years now of, hey, make sure you're doing it right from an investment perspective, allocate correctly, and then just watch the appreciation if you pick the right asset. And I think that applies to Bitcoin, but it also applies to broader markets in general. The risk you run is when you pick the wrong asset, right? When you take advantage of a market tailwind and everyone running into crypto assets and you pick these small cap assets that can appreciate very quickly and rapidly and you're looking for free money. Like that's just not how it works. Investing is not that easy. And the asset is obviously the most important part, but the principles probably follow along that quickly.